Welcome back to Investing Talk Podcast. Today we're zeroing in on Goodyear Tire and Rubber Co. You sent in a fascinating collection of information, and our goal is to really understand what it all means for you. We've got analyst reports, company news, financial snapshots, quite a bit to work with, enough to get a solid picture of where Goodyear stands right now. We'll explore their recent strategic moves, their financial health, and maybe what the future holds for this, well, iconic American brand. Okay, let's get into this.
Okay, so just to start with the basics, Goodyear is a huge global player in the tire game. Their main thing is designing, making, and selling tires for all sorts of vehicles. We're talking passenger cars, commercial trucks, even aircraft, and those massive off-the-road tires for mining and construction.
Right, the big yellow ones you sometimes see.
Those are the ones. They sell replacement tires, when you need new ones for your car. And they also supply tires directly to car makers. That's the original equipment or OEM market.
Oh, the ones that come on a new car off the lot.
Correct. Plus, they do related stuff like tire maintenance and services for big vehicle fleets.
Got it. And it sounds like they've been making some pretty big changes lately. I saw this Goodyear Forward plan mentioned, announced back in November 2023.
Yes, that's their big transformation strategy. They've set some pretty ambitious targets. They're aiming for about $1.3 billion in top-line growth and cost cuts by the end of 2025.
That's a significant number. And wasn't there something about selling off a part of the business?
There was. They completed the sale of their off-the-road, the OTR tire business, just this past February.
Okay, so trimming down to focus, maybe?
Seems like it. The idea behind Goodyear Forward and the OTR sale looks like streamlining things, focusing on the core, potentially higher margin areas.
Makes sense. Sharpening the focus, getting leaner. It's a common playbook, but does it seem to be working?
Well, that's where it gets interesting. If you look at their Q4 2024 earnings, quite a shift. They reported a net income of $70 million. That's 0.24 per share.
70 million profit. How does that compare to before?
It's a huge difference. The year before, Q4 2023, they had a net loss of $689 million.
Wow. Okay. From nearly a $700 million loss to a $70 million profit. That is a turnaround. What drove that?
It suggests the early parts of that Goodyear Forward plan might be starting to bite, especially on the cost side. But there's a nuance here. If we look at Q3 2024, revenue was around $4.8 billion, and they sold about 42.5 million tires. But importantly, those unit volumes were actually down.
Down. So profit up, but selling fewer tires. How does that work?
Lower demand in the replacement market was the main reason cited for the volume drop. It seems they're successfully cutting costs or maybe getting better prices, which is boosting the bottom line even with fewer sales.
Huh. So efficiency is the name of the game right now.
Exactly. Look at their segment operating income margins, SOI margins. They've been improving consistently for 4 quarters. Take the Americas segment. Sales there dropped about 8%, but the SOI margin actually went up to around 8.8%.
Okay, I see. They're making more money on each tire sold, even if they're selling fewer overall in some areas.
That seems to be the story. Efficiency gains are carrying the weight, while volumes are a bit soft.
Is that sustainable long-term, though? You eventually need volumes, right?
That's the critical question. You can only cut costs so far. But the margin improvement is definitely a positive signal for now. And related to that, the money from selling off parts of the business, like the OTR division.
Right, you mentioned that generated some cash.
Over $2 billion in proceeds. That gives them more flexibility, maybe pay down debt, reinvest, or just shore up the balance sheet.
Okay, so that helps the financial health picture. Let's talk strengths then. What's looking good right now?
Well, the execution of Goodyear Forward seems to be delivering on margin improvement. That's a clear strength.
Yeah.
And obviously getting back to profitability after those big losses is a major positive. The strategic divestitures like OTR also look like smart moves to focus resources.
All right. On the flip side, what are the red flags? What should we be cautious about?
The main one is definitely those declining tire unit volumes. It points to demand challenges, especially in the replacement market, which is, a huge part of their business.
If people aren't replacing their tires as often, that's a problem.
It is. And the revenue pressure they saw in the Americas, that could stick around if market conditions don't pick up.
So what's the general feeling out there? Market sentiment, analysts, what are people saying?
It's kind of cautiously optimistic, I'd say. Management sounds positive. They're talking about hitting a 10% SOI margin by year end.
That'd be a strong number.
It would. Analysts seem to acknowledge the cost control successes, but they're definitely pointing to those volume pressures too. It tempers the enthusiasm a bit.
So a wait-and-see approach from them.
Somewhat. Looking at ratings, it's maybe 3 buys, 5 holds, no sells out of the analysts covering them recently. Price targets are clustered mostly around $10 to $14, with a median near $10.50, not far from where it's trading.
Okay. And how are they doing against the big competitors? You mentioned Bridgestone, Michelin, Continental too, right?
Yes, those are the giants. Bridgestone has the biggest global market share. They invest a lot in R&D. Things like smart tires, pretty stable, diversified.
In Michelin.
Michelin is more of a premium brand focus, big on sustainable materials, innovation there. They tend to have consistently strong profits and, importantly, higher margins than Goodyear recently, maybe around 12% EBIT.
To 12%. So Goodyear's target of 10% would still be a bit below Michelin, but a big improvement for them.
Correct. And Bridgestone, for example, has a much stronger footprint in Asia, whereas Goodyear is still quite America-centric in its revenue.
That geographical difference matters, especially with growth potential in different regions.
It does. Reliance on the Americas could be a risk if that market slows down more than others.
So thinking about the future,
Right.
what are the potential catalysts? What could really push Goodyear forward?
Continued successful execution of that Goodyear Forward plan is number one. Every earnings report will be watched closely to see if the profit growth is sustainable.
Proof is in the pudding, basically.
Pretty much. But there are risks too, of course. Regulatory changes are always a possibility in manufacturing. Think environmental standards, tire durability rules,
Things that could increase costs.
potentially.
Mm.
And then there are the broader market conditions. If people drive less, if raw material costs spike again, those things can hurt.
But what about opportunities, like electric vehicles?
That's definitely an industry driver. EVs often need specialized tires, different performance characteristics. That's an opportunity. And the whole push towards sustainability is another area where innovation can pay off.
Right. And they've been busy already this year. You mentioned the OTR sale. Anything else recent?
Yeah, a couple things in February, March. Besides finalizing the OTR sale, they launched a new tire, the Cooper Work Series RHA2.
Cooper. That's a brand they own, right?
Yes, they acquired Cooper Tire a few years back. This new tire is for regional commercial trucks, so focusing on that core segment, and maybe more symbolic. But they celebrated the 45th anniversary of their Eagle product line in March.
45 years. That's some serious brand history. That recognition must be valuable.
Absolutely. Brand loyalty counts in the tire market.
Okay, let's touch on valuation a bit more. Key metrics to watch.
Well, debt to equity is important. It's historically been on the high side for Goodyear, given it's a capital-intensive business. Need to see how the recent moves have impacted that in the latest filings.
So check the balance sheet health. What else?
Free cash flow, especially with the Goodyear Forward plan, aiming for $750 million in benefits in 2025. How much of that turns into actual cash? Price-to-book ratio might be lower than peers if the debt load is still heavy. Industry average is maybe 0.8 to 2x.
And dividends.
They aren't paying one currently.
Yeah.
That suggests they're plowing everything back into the restructuring and debt reduction, which makes sense right now.
Right, priorities. And volatility. Is it a jumpy stock?
Its beta is around 1.6, suggesting it's more volatile than the overall market. That's
Yeah.
pretty typical for companies tied to the cyclical auto industry.
Okay, so putting it all together,
Yeah.
after digging through all this, what's the summary view?
I think based on everything, a hold perspective seems reasonable right now.
Yeah.
Look, they've made real progress getting back to profit. The plan seems to be working on margins. That's good.
Yeah.
But those falling replacement tire volumes are a genuine concern for near-term revenue. It clouds the picture a bit. It feels like the stock is set up for a gradual recovery, but there are definitely headwinds and things that need to go right.
Okay, so a hold. It's a story of progress, but with definite challenges still ahead. So what does this all mean for you listening? Goodyear is clearly in the middle of a major shift, showing some promising signs of recovery. But like any journey, there are still potential bumps in the road, right? Keeping an eye on those volume numbers, seeing if they can turn those around, and watching the continued success of Goodyear Forward, that seems crucial. And it raises a bigger question, maybe. How will shifts in, driving habits, the rise of EVs, how will that really impact a company so rooted in traditional tires over the long haul? Definitely something to think about as you do your own research. Remember to subscribe, like, and comment. Let us know what other companies or topics you'd like us to explore.